Hi, this is Tom Bonetto, the lending coach, with a brief tutorial on the investment property analysis tool. It's a relatively new tool that's now available. It'd be my pleasure to help you run some numbers and prepare this for your clients. Interestingly, and according to Kiplinger, 2/3 of an individual's net worth comes from real estate, so owning property is a great way to build wealth. This particular tool can help your buyers better evaluate the decision to purchase a particular investment property or even enter in the investment property marketplace as well. The analysis provided by this tool is going to calculate the return on your buyer's investment based on area-specific appreciation, rental rates, and even includes the cost to buy and sell the property. Important metrics such as your cash-on-cash return, a compounded annual return, are easily shown to help your buyer make better decisions on selecting the best opportunities in today's marketplace. Based on data from Fannie Mae and Freddie Mac, about 1 in every 6 or 7 purchases are for an investment property, believe it or not. So building wealth via investment property income and appreciation is a pretty popular strategy. As a real estate agent, the results from this analysis will set you apart for providing such a detailed and unique insight into your buyer's upcoming investment purchase. And more than likely, it's going to help them move forward with the transaction with you as their agent. So let's take a look at the tool. And for our analysis in this particular case, the assumptions are as follows. It's going to be a 3-unit rental property, a $725,000 purchase price with a 25% down payment. It's going to be a 30-year fixed mortgage at 6.99%. We're going to expect monthly rents of $3,900 a month, and the expected hold time for this client is 9 years. The analysis done by this tool will actually break down monthly cash flow and cumulative cash flow for as long as the borrower is expecting to own the property. In this case, in our sample, we're using a 9-year hold, and you're going to see in the first year there's essentially a break even, but after years 9, there's a cumulative cash flow of nearly $90,000. Part 2 shows the cumulative cash on return over that 9-year hold period, and it factors in every expense from your principal and interest to your property taxes and insurance, maintenance and repairs, even HOA fees if it's a condominium, and it shows your expected cash flow over those 9 years. And in this case, the purchase represents a 12% return just on the cash flow alone. The third part of the report shows the annual total return on investment, and as you can see, it's very high. We're now starting to utilize appreciation in the calculation. And at a 4.5% appreciation rate in this particular case shows an amazing return on the down payment investment. Now, doesn't tell the whole story because you have to factor in your expenses too, and that's where we get to in the next part. But what's most relevant is the annual average compounded return, so you can measure this return against other investments. And when you consider both the cash flow and the appreciation, the tool gives the borrower an average annual compounded return, and in this case it's 14.3%, which is a heck of a great return considering the cash flow it's going to be using as well. As you can see, it's an extremely helpful tool to help analyze a particular income producing property to determine whether it's a good investment or not. And all I need is the property address, anticipated purchase price, and the expected rents, and I'll put the analysis together and send it to you so you can give it to your client. Now, don't forget, this is a tool that's a great resource for a single family short-term rental as well. So don't hesitate to use this for those clients interested in short-term vacation rentals. And reach out to me today so I can run some of those numbers for you. I hope you found this interesting and helpful. It would be my pleasure to work with you on anything investment property related. And here's my contact information from my website to my email address to my phone numbers in both Arizona and California. Again, thanks so much, and I look forward to working with you.